Welcome to the fourth session. Our fourth session is going to be made of chapter 4 by names of taxation of employment income, where we are going to see how the employment income is being taxed, how the people who are employed, the people who are still depending on the employers, have to be deducted depending on the income they have received. Here, the two things we need to look at. First of all, we need to look at what they call self-employment. We need to see the distinction between self-employment and employment. So, self-employment, in brief, it is a contract for providing a service. While the employment, it is the contract of providing a service. So we need to look at how these two concepts differs. Of course, on the side of self-employment, the degree of the control is very low. The degree of control is not high. Sometimes there is no even. So here the degree of control is not high or is low. That's what I can say. But in employment, the degree of control is very high. So again, under the self-employment, there is further work with further employment, with further payment. So that means that if there is further work, this employee has to work, it should be followed with the further payment on it. But here, anytime the employee can accept the further work without further payment. Another thing on the side of self-employment, the employee here, he or she can hire the helper, but under employment, he or she can not hire a helper. Another thing, under the self-employment, the taxpayer, self-employment, he is taxed under the business income. While here is taxed under employment income. So let us look at Look at the PAYE. The PAYE is paying pay as you earn tax. PAYE systems. The PAYE systems. The PAYE systems. The PAYE systems, we need to look at the monthly band. And we need to look at the annual band. So under monthly band, we need to look at an employee that earns between 0 to 30,000 should pay 0%, which is equivalent to 0, and from 31 to 100, the tax is 10%. This one is normally equivalent to 14,000 because it takes 100,000 minus 30,000, then 7,000 times 20%, then you get 14,000. So above 100, you pay 30%. You pay 1%, and then you get the tax liability. Get the tax liability. So how about the annual band? So for the annual band here, it is from 0 to 360, which is 0%. From 360 to 1.2 that is 20%. From above 1.2, it is 30%. This one is equivalent to 168. Important definitions we need to see here, we need to check here. Among of them, we need to look at what does the casual laborer imply? Casual labor. For you to be a casual laborer, what does it mean in other words? So a casual labor here, these are the workers, or these casual laborers, these are workers who don't require the special skills, and they don't have to exceed 3 months. Exceed 3 months of 3 months working in the company, and if it happens, they become permanent. If it happens that they exceed 3 months working in the company, they automatically become the permanent staffs, the permanent employees. And their tax, the tax here is 15% as withholding tax. And what happens is that 30,000 and 30,100 francs is exempted first, is exempted first. Another thing we need to look at here is, okay, let me give an example of how the casual laborer is taxed. Let's assume that the payment received is 100. So you need to compute the amount of the tax the casual laborer should pay or should be charged. Therefore, we have seen that 30,000 first of all is exempted. So that means that it is 100,000 minus 30,000 first of all, and you get 70,000. So this 7,000 is the one that is applied to 15% of withholding tax. So this gives me the 10,500 Rwandan francs. 10,500 Rwandan francs as tax payable. So let us look at the second employment. The second employment. Here, the second employment, it is taxed at 30% actually. Second employment is taxed at 30%, while the first employment should be taxed using the monthly or the annual band of from 0 to 30, 0%, from 30 to 100, 20%, above 100, 30%. But when it happens that you have the second job or you have the second employment, your taxable amount will be taxed at the 30% of employment income. Under employment income, under the second employment, it is where you spend. You can say where you spend. You can where you spend more time, or where you get more money, where you earn more money. Where you earn more money is the first employment. Is first employment. Is first employment according to the law. According to the law. So the second employment, you might be having the first employment and the second employment, but the first employment, it is where you spend much time. But you find that in the first employment, it is where you spend much time, but in the second employment, you spend there the less time, but you are paid the much money. If you are working for those two companies, where you earn much money, it is the one you regard as the first employment. As long as, however much you are spending the much time there, but earning less, it doesn't make any sense. So that makes it the first employment, where you are earning more money, and where you spend more time can be the second employment. Let us look at the employment, the types of employment here. So what are the types of employment? We can talk of like salaries. Of course, these are the monthly salaries. We can talk of wages, also the payments that are paid to the laborers. We can say the leave pay. We can say the payment in a year of leave, or the payment instead of leave. We can say the subsistence allowance. In other words, it's the upkeep the company makes to its employees, to their employees. We can say the reimbursement of personal expenses, like when you have gone to the official duty, So the money you have maybe incurred, the expenses you have incurred, when you come back to the work premises, you have to be refunded that money. We can say the pension payments, those people who are being paid their pension contributions. We can say the redundance payments and terminal benefits. The redundance payments are like the payments when you have not worked, and the terminal benefits. We can talk of payment for the work in special conditions. So all these payments are under the types of employment income. So how about the exemptions on employment income? So of course there are some of the exemptions of employment income. Like number one exemption is the reimbursement of expenses incurred on official duty. If you have incurred those expenses, maybe you have gone to the mission, you have gone to the conferences, you have gone to the seminars, and you find that you have used your money for accommodation or for meals. So when you come back, this money have to be reimbursed, have to be refunded to you. How about the pension contribution in state fund? Also, these are the contributions to the state fund, like RSB in the context of Rwanda. In the context of Rwanda, that is Rwanda Social Security Board, that is in charge of managing the pension contributions of the employees. The medical contribution, if maybe the employer is contributing for you in the medical is making the medical contributions. These are just the money the employer may contribute for you. So the contribution in private fund, also the employer might also contribute for you in a private fund. In Rwanda, I can talk of IGI, the one they call Ejo Heza. So that is an example I can give to the contribution in the private fund. Let's look at the individuals whose incomes are exempted. Here, the individuals whose incomes are exempted, you can talk of like the diplomats, for example, the ambassadors. You can talk of employees who works in embassy with the diplomat passports. Also, they are exempted from the employment income tax. You can talk of a non-resident employed by foreign country or an NGO or international organization and paid by the foreign country with a bilateral agreement with Rwanda. So all these are exempted from employment income. Let us look at the benefits in kind. So it is any payment. It is any payment which is not in cash, which is not in cash. Therefore, you can talk of a benefit like motor vehicle. So motor vehicle, when it happens that it is a company car, or when it is a rented car. So when it is a company car, the benefit is 10%. It's 10% of gross salary. The gross salary of the gross salary. Hence, it is a benefit in kind. It is a benefit. It is a benefit in kind. If the car is raised and company pays the owner, you recognize it as an allowance. you recognize it as an allowance. So same applies to the company house, to the accommodation, which is another benefit in kind. The same when it is a company house. When it is a company house, the benefit is 20% of gross salary. When it is the rented house, the rented house, if the house is raised, and the company pays the owner, you recognize it as allowance. The loan as the third benefit in kind. Here the loan, the benefit is the difference between the interest offered and interbank rate. Therefore, for example, if the loan is 10 million at interest rate of 5% and interbank rate is 17%, that means that you need to look at the difference in the rates and then you multiply by 10M, then you get your 120,000 as a benefit in kind. So how about the salary advance as the benefit in kind again? So here the 3 months are exempted. Then the difference between interbank rate and offer rate and the interest offered. Then the difference between interbank rate and offered rate and offered rate. So for example, if the salary advance here is 10M at 5% and interbank rate here is 17%. So and the salary is maybe 2 million. So we can sort it like this: 10 million minus 3 months. First 3 months are exempted. So times 2 million. So here it gives me 4 million. And the 4 million, you need to multiply it by the difference between the interbank rate and the offered rate. So therefore, it is times 17% minus 5%. So which gives me this one gives me 480. So this is a benefit in kind. School fees. Here the school fees, it is said that if the money is paid, is paid to the school. If the school fees is paid to the school by the employer, so that makes it to be a benefit in kind. So it's benefit in kind. But when the employer gives money to employee to pay the school, so that becomes the cash in kind. So let us look at the domestic employees as also another benefit in kind. The domestic employees. Here the domestic employees, the amount paid by employer is a benefit in kind. Amount paid by employer to the domestic employees is benefit in kind. So let us look at the solution to the question 1 I've sent you on the employment income. What you need to come up, first of all, you need to come up with the basic salary. And the basic salary, for the Mr. Mugire, who is aged 48 hours, 48 years, and works in the BDO, is 11. It is 1.250, 1,125,000. So because we have been asked to come up with the annual employment, so that's why we need to multiply by 12 and we get the 13,500. And then I have to add the cash benefits. The cash benefits here I have, number 1 is the rent allowance. And the rent allowance in the question, it's $600,000 francs. And here we also had the hardship allowance. We was paid the hardship allowance, and the hardship allowance here was 100,000 and 120 and 10,000 to 500. So the responsibility allowance the responsibility allowance here was 75,000, while the reimbursement of medical expense, we need to also factor in the reimbursement of medical expenses, and it is 2625. So therefore, we also have transport. The transport allowance, it was given 16,250. So we need to multiply. He was subject to the transport allowance every month of this one of 16,250. So we multiply by 12, then we get 435 100. So we look at the total. So that is the end of the total. That is the end of cash benefits. Total cash benefits is the total cash benefits is 140. It is 14. 8. It is 1.4, and then we need to add so that we can get the gross salary. The gross salary here is 14 million 9 is 14,985,000. So we need to check the benefits any kind. So let us start at the new page over there. Qualified fund here. This one, this benefit in kind is just it's irrelevant. So, but there is also the RSSB. It is also irrelevant. There is also interest income, which is investment income. It is also irrelevant. We also have the rental income. Rental income. This one is also irrelevant. It is not employment income. There is also the medical insurance. Medical insurance. The employer was contributing to him the medical insurance. This one is irrelevant. This one is relevant. There is another. We have the air ticket was given, so which is worth 3.8 750. 3.875,000. So that gives me the total of taxable increment income. The taxable increment income, which is 19,735. So this is the taxable increment income. So therefore we need to check the tax liability or the tax base. The tax liability, it is from 0 to 30,000. To 360. This is 0%.